1, 2, 3, 4, 5, 6, 7, 8, 9, $10 million. Oh, hey, I didn't see you there. Just counting my profits from today's trading. Today I came up with a formula that I'm going to show you guys how you can simply use this in order to figure out how much profits to take along the way in a trade. You can use this methodically so that you can kind of act as a robot and you don't accidentally take too much profit off the table and then things go way in your favor, or you don't take any profit off and it comes back against you. And this is going to be the most accurate way to be as risk-free as possible. Right, so my name's Hunter, this is Hunter FX, and I just finished counting my fake US hundreds. I'm Canadian. I have fake US hundreds. Anyways, this is a really simple formula that I just came up with today, and we can basically look at where we're going to take profits off along the way. So I've gone ahead and jumped right into the charts here. It's going to make it a little bit easier to explain what I'm going on about with this, because this was actually a trade that I was taking today, and I thought of this idea on how we can actually take profits a mathematical way, in a sense. So this was roughly the trade I was taking. I've just kind of thrown it on. I think it was about 7R trades, but this is close enough. And basically I was just entering on the retest of this demand explosive move out here. And it was a little bit high, a little bit lower maybe, but it's really not that important. Now, after it started moving in my favor, I started saying, well, maybe I want to take some profit. So we looked here, we saw this wick right here, and we saw that it closed below it. So we kind of made this sweep pattern, and I've made a video about what this sweep pattern could mean in a previous video, and I'll link that up in a card there if you want to watch that. It's a strategy that I've come up with, and I've seen this kind of sweeping pattern, and I'm thinking, okay, maybe it could reverse now. So this would be a wise time to take profits. Now, what do we want to do? We want to first figure out our risk. Now, our risk at this point is, let's look at how far we are. First of all, we're about 2.3 R into the trade. Now, what I've done at this point, obviously, is I moved my stop up to break even. So the risk is only what we have left to lose to the stops. So our risk is the current stop placement minus the R that we have unrealized. So in this case, we have unrealized R of 2.34 and our stop placement is 0R. So 0 minus 2.34, our risk is going to be 2.34. And our reward, let's throw this back up here, is the remaining in the trade. And remaining in the trade was approximately another 4R. So our risk reward here currently is 2 to 4. So when we're seeing a possible point where price could be turning around, a really high likely place for it to reject and, come back to our stop and stop us out here. How are we going to take profits and how much are we going to take? Well, we've just determined that the risk is only 2 and our reward is 4. So our reward is twice as much as our risk. So obviously, we're not going to want to take off a large amount because we could still possibly win a bunch more. So now we can conclude that we actually only want to take off 2/6 of the trade, or what is that, 33% of the trade, because we are 33% of the way into the final trade, basically, if you want to look at it that way. Now, this changes a little bit based off of where your stop is. If your stop is still in the negative, then your risk is going to be higher. So if our stop was still down here for some reason, our risk would be roughly 50%, because our risk is now 3R that we could lose, and our reward is 4R. So we would take off even more. We would take off probably about 40 or 45% of the trade because we have much more to lose than we have to gain. So let's look at this scenario here where the price has actually come up and we've moved our stop to somewhere in profit. And let's say that this profit point is 2R and our current unrealized is, let's say, 4R, just to give us a rough number. And this is a point where we're thinking it might change direction when it reaches here, right? For some reason, it doesn't matter why. Now we go 2R minus 4R, because that's the formula I've just told you. So our risk now is 2R of the trade. And our reward, how much do we have left? Maybe 3R left in the trade. So our deduction now is that our risk reward is about 2 to 3. So we should actually take off even more here because we're not left with much reward with the remaining risk. We have 2 risk and we have 3 reward. So we should take off roughly 60% of the trade. All right, cool. So hopefully that makes enough sense for you guys. And you can kind of use this as a running take profit in the means that if you start to see some sort of reversal like I've just shown you, then you can take off a little bit at that time depending on how far we are, or you can allocate preset take profit points and then take off different percentages based off how far you are into the trade. If you guys do want to see the formula just written down a little bit more in writing, I've written it down in the Discord under risk management section there. So join the Discord in the link below. And other than that, if you like the content, please make sure you hit the subscribe, hit the like button and the bell notification, all that jazz. And I'll see you guys whenever.